In 1969, Mr. Jean Coutu founded his company through the opening of his first pharmacy in Montreal, Quebec. With a clear vision of providing consumers with a store which could cater to any shopper's desires, Jean Coutu was immediately recognized as ingenious. Jean Coutu initially differentiated his company from his competitors by combining pharmaceuticals along with other retail products. This innovative idea eases the process of consumerism by supplying all types of merchandise in one store for discounted prices. The retail powerhouse involves itself mainly in the pharmaceutical industry, but also sells merchandise relating to beauty, hygiene, nutrition, cleaning, electronics, and publications. Jean Coutu's unique strengths can be proven by the fact that in less than 15 years from its founding, Jean Coutu had already franchised over 60 stores. Little to note that 60 franchises would be looked at as the beginning of a very long and successful journey. Many consider Jean Coutu's initial public offering on the Toronto Stock Exchange in 1986 to be the eye-opener into how profitable of a corporation Jean Coutu really was and continues to be. Today, all 400 franchise locations run under the same concept as Coutu first envisioned in 1969. With stores in 3 provinces, which include Quebec, Ontario, and New Brunswick, Jean Coutu has chosen to expand their mega corporation in a very steady and intelligent way. A way which has caught the eyes of large U.S. corporations such as Rite Aid, who acquired 1,858 U.S. Jean Coutus for the cost of $1.45 billion cash, in addition to a 32% equity stake in Rite Aid in 2006. From 1999 to 2004, the chain was the second fastest growing retailer in the world. Though many praise Mr. Coutu as the ultimate manager and developer, proven by the outcomes of the decades of work that he put into the Jean Coutu Group, it is what is done outside of the pharmacy which makes this investment that much more attractive. Rather than trying to open as many retail stores as possible, as most competitors are doing, Jean Coutu is constantly looking at investing in opportunity. In 1991, Jean Coutu ventured into the real estate industry, acquiring 11 properties their stores were housed in. As a result, Jean Coutu was capable of diminishing their expenses and increasing their revenues. In addition to real estate, Jean Coutu buys into the shares of companies. For example, Jean Coutu recently invested $50 million in a colocation center called Colo-D Inc., which is on its way to expanding to a whole other level. Financial analysis. Jean Coutu's dividend payout makes me wish that I were a stock market investor in 2006, where dividends paid out have almost multiplied by 5 since. This chart does not only represent a high dividend yield, but proves the exceptional sustainability associated with Jean Coutu. As we can see on the graph, Jean Coutu's stock price is currently evaluated around $21.68. Jean Coutu's stock evolution has been overall extraordinary and continues to prove itself as profitable. Since January, Jean Coutu's stock is up 21%, following a trend of increase which has been present ever since the IPO of the company. When analyzing Jean Coutu's stock over the past year, we get a feel for the kind of positive development that continues to happen. However, we are still somewhat misinformed in relation to understanding the reality of the profitability and sustainability of the company. When we start to zoom out and familiarize ourselves with the stock comparison from as recent as 2012, we are given a much better idea of how the company stands at the moment. In the past 10 years, the stock has more than doubled in value and continues to increase in value annually. As a result of Jean Coutu's strong returns, they have experienced amazing outcomes in other aspects of business. For example, an 18.5% return on equity and an equally impressive 18.36% return on invested capital. When comparing the net incomes from 2016 and 2017, we can clearly see a stable increase in profit, exceeding the expense increase percentage, which hints at a very profitable and sustainable company. It is crucial that we look at the percentage change and not the dollar change, so we can proportionally compare the different amounts. When looking at the vertical analysis, we can immediately determine an optimistic relationship between Jean Coutu's assets and liabilities. The fact that stockholders' equity accounts for a lot more of the company's assets than the liabilities do suggests that Jean Coutu can optimistically pay off its debts, loans, and expenses while also being capable of managing the leftover equity, which can be invested, distributed, or put back into the company. In comparison to 2016, 2017 does offer a lower percentage on stockholders' equity and a higher percentage on liabilities, which could suggest a current downfall. However, it is important to also look at the increase in equity. The liability increase may be explained by a loan, which is being used to generate additional funds in the future. The fact that the total equity had already increased in a matter of a year should indicate that the increase in liabilities is worth the increase in equity. The ratio analysis allows us to understand Jean Coutu to a whole new extent. The current ratio, which is a liquidity ratio, allows us to understand how easily a company can pay its debts. With current assets valued at 2.464 times greater than Jean Coutu's current liabilities, we can assume that Jean Coutu will have no issue paying off its creditors. The profitability ratio gives us the opportunity to understand how effective Jean Coutu is at marking up prices and selling products at a profitable cost. Because the idea behind Jean Coutu is that products are sold at a discounted price, it is fairly understandable that Jean Coutu only marks their prices up by 10%. However, without understanding the concept behind Jean Coutu's profitable corporation, an investor can look at a 10% markup as a handicap to the company. The leverage ratio can help us calculate how much of the assets are reserved for debt. Using just 20.6% of the assets to pay off debt, we can assume that Jean Coutu does not heavily rely on loans or interest to receive capital, which is usually something that only extremely profitable and well-managed companies can afford to do. To further my understanding of the company's standing, I also did a ratio analysis for 2016, hoping to just see an annual percentage increase in each category for 2017. To my surprise, the profitability percentage was higher in 2016 than 2017. However, it is important to note that the company is more capable of paying its debts. This suggests that Jean Coutu most likely lowered its prices but increased the volume of its inventory, resulting in an overall increase in profit. In conclusion, I would aggressively invest in Jean Coutu's stock. There are countless indicators which suggest the immense profitability this company has sustainably proven since its founding in 1969. After looking at the financial analysis of the company, we can clearly conclude that since 1983, the company has been moving in an upwards direction. With a recently calculated 18.5% return on equity and an 18.36% return on invested capital, Jean Coutu is one of the few corporations that can nearly guarantee you a return on your investment in 3 years. Since January, Jean Coutu's stock is up 21%, indicating that there is still major growth potential even though the company has already grown to such great extents. What attracts me most to this company is its bold decision to diversify its involvement. Jean Coutu has stakes in all kinds of industries, including real estate and colocation. The decision made to buy out many of their landlords has resulted in a substantial increase in assets and a huge decrease in liabilities. In doing so, Jean Coutu can profit off of the appreciation of the properties acquired, in addition to not having to pay rents. In addition to the financial information, I wanted to inform myself on the industry information to be sure that my dollars are being invested to their greatest potential. Due to the fact that pharmaceuticals are always in demand, it is nearly impossible that this industry can ever experience a recession, because whether there is a recession or a drastic increase in unemployment rates, people will always need medicine. This thought is what comforts my worry of the industry ever failing. In addition to information regarding the industry, I wanted to familiarize myself with the Coutu family before making a definitive decision to invest in Jean Coutu. I was pleased to learn what an admirable and intelligent family this business has come from. Recently passed on to Jean Coutu's son François, the business has stayed within the hands of the family. I am confident that François will assure that the right values and ethical principles will be kept in place. He has already earned my respect as a businessman through a response he had made some months ago. The company will continue to grow by buying one drugstore at a time. This indicates to me that François is a patient businessman, which is a key characteristic one must have in order to succeed as an entrepreneur. In thinking down the line, there are plenty of opportunities for Jean Coutu to make money within their own industry. With the legalization of marijuana coming around the corner, I think Jean Coutu can play a huge role in being distributors, which can account for a whole new revenue associated with the mega corporation. Jean Coutu has been so confident in their own company that 14% of shares were bought back over the last 4 years. As an investor, this indicates that their increased interest in the company will result in greater future developments as their profit margin now increases and they have more of an incentive to want to make money. In my opinion, all signs point at Jean Coutu as being one of the most profitable and secure investments out there. For over 45 years, the company has proven increasing sustainability and profitability, proper ethical and moral principles, diversification, increasing dividends and return on equity, 48 years of experience, and consistent investments. After conducting my research, I am certain that I will invest my money into the Jean Coutu Group.